Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the April 28th stock market wrap up. And let's first start off the day by looking at the NASDAQ composite, as this is the index that I personally follow the most and the most active with. And I'm going to go all the way out on the plus sign. No, I already did, so see it completely. Now, I'm going to show you something today. Now, yesterday, the market opened kind of weak, got stronger intraday, and then sold off and ended weak intraday. The same thing happened today. However, there is good news in a little bit of on two sides of this. The last 2 days, the market's only pulled back 0.88% on the NASDAQ, and then today only 0.33%. The better news is that after the accumulation day where the market hit a new high, it fell on lower volume at first on Monday, and it's fallen on lower volume again on Tuesday. This is very good news for bulls who want to continue to be bullish, and not good news for bears who want to look to get short. You should be seeing volume rise, get heavy like it was on options expiration Friday, which is why I was telling everybody, be careful with this distribution day right here. This distribution day has this huge volume thanks to options expiration. And as you can see, oh, excuse me, that was an options expiration, wasn't it? Or was that options expiration? 17. No, it was the week before. Okay, so that was actually a very bad sell-off. So never mind. That is my bad. I said it was options expiration. I am wrong. Don't know why I got that confused, but you know what? It happens sometimes. To be honest with you, I didn't find it that bearish, and I think the reason why is because of the baby tail that you see here. Also, looking at the support line of right here, you can see how it held. And then, even if you want to go out a little bit, use this as a support line. That's where it broke through. And that would have taken you out on the most shortest of short terms. However, as you can see here, if you connect these lows, thank you very much, the stock was above that trend line. So maybe those are the reasons, because since I don't use trend lines, I'm only using trend lines for you guys, since I can automatically see them in my own head. That's why I think I probably didn't get too upset, because I could see all the support that it was holding on to, the 50-day moving average, the April lows, and then the uptrend line using the mid-March, and then connecting the rest of the lows. So it's probably why I didn't get too upset. I did think that this was on Friday, though, so that's pretty bad. Let me see what the New York Stock Exchange did. It was a pretty ugly sell-off. No doubt. No doubt. Man, it's awesome. I think, you know what, the ultimate reason why I probably didn't get embarrassed? The stocks. Let's go to the 20th. I can't believe I can't remember back to the 20th. That's kind of sad. On the 20th, though, yeah, no new longs, no new shorts, no full covers, no full sells. So it was just a day that I just wasn't too worried about overall, even though it was ugly. As you can see, the very next day, we fixed it, intraday-wise at least. And then a few days later, we are hitting new highs. And the pullbacks, lower volume. Guys, that's good. So everybody that's panicking now, everybody that thinks the swine flu is going to cause, it could, don't get me wrong, the swine flu is going to cause major problems, which it already is causing problems, and then it's going to destroy the economy. I don't think so. I remember SARS. I remember bird flu. And I remember I remember some other things also from even earlier, like in the late 90s, early 2000s, but nothing quite like we get now. And it just has never panned out. Now, this one is the worst one I've seen in a while. However, look at the lower volume. I mean, how can we fight that? So you're like, okay, well, that's the NASDAQ. You know, techs have been leading. It's true, techs have been leading, and that's where you should be focused. However, even if you go look at the S&P 500, you can see that on Friday, it had a 1.68% gain, still very strong, on higher volume the day before and above average. On Monday, the sell-off was 1.01%, still above the lows of the day before, and above, I'm going to show you this. Let's get rid of that trend line and connect the trend line that I gave you with the NASDAQ. And it's still above this trend line right here. So, as long, see right here? As you can see, it's right on it. So it's still above the trend line on the most short term, no problem. Even here, it's kind of holding on to it. As you can see, you draw the trend line, actually, it's cutting right through it. So short-termers might want to see a bounce right here. Me, I'm not worried at all because this volume is extremely low. And the last 2 days, I've added no shorts. Now, however, on Friday, I did have 2 new shorts, which did hint to me that it's possible we were going to have a short-term pullback. And I told everybody to be ready for that because why else on a big up day on Friday would I get 2 shorts and only 1 long? However, on Monday, I got 2 new longs and a new ad and no shorts. One of those 2 new longs was down under 1%. The other one was up 24%. If you took that as a long, which mine was very small, of course, if you took this stock as a big long, you were crazy. However, crazy worked. Now you got a 48% gain on margin. Way to go, guys. However, you need to take 25 to 33 to, depending on how much you have, 50% if you have way, way too much off the table because it's a very speculative stock. However, a 24% gain in one day, that's how all the speculative stocks are supposed to be acting, honestly. But they need to all be acting like this at the same time for me to get extremely bullish and want to go full margin on stocks like that. Can slim stocks, though, definitely still watching. However, no move yet. But it's good to see the volume lower on the pullback, and that's about all you can ask for. SOX, get the SOX index up to show you how it's holding in there. The recent tails, you can see what it's trying to build here. Break out of a flag pattern, it looks like. Some people might want to call it. I hate using these super short-term lines, but there's a flag pattern in there, and some people will probably be like, oh, it needs to resolve itself up or down. Me, I don't care. I can come all the way down to the 50-day moving average. I'm not going to get bearish. Break down through the 50-day moving average, then I'm going to start changing my tune. However, as long as it holds, the semiconductor stocks are going to continue to, be very important on my radar screens whenever I see them come up because the index is up 30%. It's a very strong index, as you can see off the November lows. Nothing compared to the NASDAQ, though. So I kind of focused on the NASDAQ and SOX there for a little bit. Let's see. I'm going to see how much time we have. I just didn't want to go full 10 minutes on the one today. All right, I can probably keep it under. I'm going to go and show you the IBD 100 and IBD 85 indexes, if I can. IBD indexes, 100 index. I'm going to show you on it today on a daily. As you can see, an up session, almost up 1%. Guys, that's another positive divergence. It gives it 2 days of positive divergence now in a row. And that's just shocking to me because we haven't seen this in IBD 100 in a while. But markets were down again today. And this time the IBD 100 was up almost 1%. So a way to go. Weekly still looking very, very good off the recent lows. But from the November bottom that everybody else, or that all the other indexes are doing well with, it's just kind of odd to see it not doing that well. Now let's go look at the 85. Looks good on a weekly. As you see, no volume here. That's because a ton of stocks on this last leg down in 2008 just ended it. Put no stocks near new highs. Put very few stocks with great earnings growth in the position. That's why the volume's so low compared to the IBD 100. So I don't pay attention to the volume as much, even though, because compare it there. But now it's getting much better. Still, it's kind of skewed, but oh well. And look, it too was up over 0.5%. It was up about 0.75%. No, 0.6% probably, right around there. But almost 1% gain higher. So pretty awesome to see the IBD indexes higher, and you see the relative strength line ticking up there a little bit against the 500. That's always good to see. Let's end it really quickly with the United States dollar. Still in a nice uptrend. I'm gonna get rid of all these trend lines. I don't need them, but we'll use them later on. Still an uptrend from the lows in March. Very good. Gold had a rough day. Excellent intraday support, though. Silver. Wow, that's a very negative session. Holy moly, cajoli. Wow. Open at 1243, get up to 1295, and fall all the way to 1233. Close 1244. Yikes, that is not good at all. And that goes with platinum. Wow, man. 2-day breakdown in platinum of 7%. So that kills any bullish tone. That's pretty amazing to me that it broke out in March and is failing. So this is a complete sign that if you went long here on this move, you got to get out of all of it. Let's get out of all of it. The relative strength line's breaking down below that low. As you can see here, if I could draw the line here, that's moving down while this is moving up slightly. So negative divergence. Not good. But notice the strongest of the three metals, gold. Look at the close on silver. Look at the close on platinum. And look at the close on gold. There's got to be a reason for this, guys. However, I personally want the things to pull back so I can buy more. But I'm not interested in silver, or maybe I am a little bit platinum, but not really. I'm really interested in just one thing, gold, because everybody loves gold. I don't know why, but they do. I know I do, so maybe that's why. All right, I'm going to wrap it up there. Aloha, everybody. Part 2 will be next for subscribers, and Part 3 probably, since I got nothing else better to do tonight besides more tax stuff. How stupid. Aloha.